Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto market. In this video, I'll be going over my trading plan for Bitcoin and Ethereum for tomorrow's May of 2023 FOMC data release. So if you want to find out how I'm trading Bitcoin and ETH, this is the video for you, so be sure to stick with me until the very end. Without further ado, let's get right into it and let the gains be with you. So as you can see, tomorrow, May 3rd at 2 p.m. Eastern Standard Time, we do have the US FOMC statement coming into play. We will be finding out what the next interest rate hike will be here in the United States of America. So this is a very exciting time, and the market is waiting for this release of data to hit so that it can decide what it wants to do next. Now, taking a look at the crypto market, right now Bitcoin is trading for $28,750 and Ethereum is trading for $1,874. Now, taking a look at the charts, we're actually going to start things off looking at the US dollar index and not Bitcoin or ETH, because really the dollar is going to dictate how crypto plays out here. And a lot of interesting things are actually happening in the dollar. We're going to start things off looking at the weekly time frame. And the first thing I want to point out to you is we do have this really long trend line going back to May of 2021 on the dollar. And this trend line was broken on the weekly time frame over here back in January of 2023. Now around 4 months ago now. It's crazy how fast time is flying by. But as you see here with the arrow on my screen, the trend line was broken, showing that the dollar has lost a ton of strength. And of course, during this big downtrend for the DXY, we saw crypto boom. This is when Bitcoin went from 16K up to 25K. And then essentially what happened was the dollar made its way back into this channel above the trend line. It did test the supply zone at the 105.8 area. It was rejected and it lost the trend line once again. And it has been trading down right back to this 101 support area. So now if I drop this to the daily time frame, so the dollar right now, what you have to know is it's weak, it's bearish, and it's looking like it wants to absolutely break down. And if the dollar does break down here tomorrow, this week, it's going to line up very well with that May 5th date that I've been speaking about for several weeks now on the channel, saying that that is the day, Friday, May 5th. I expect this choppiness that we are experiencing in the crypto market to subside. And the dollar is lining up very well for that date right now. Let me explain. So as you see, we have this double bottom structure at the 101 level. And if we really want to get technical here, it was actually a market structure break. Because as you see with this low, the low of this candle was 100.82. And the low of this candle down here was 100.788. All right, so this did actually break the low over here. All right, so that's a market structure break. It bounced up to a lower high, also back into our gray supply area resistance zone. And that was also a sweep of the Monday high. All right, and this all took place today. Your eyes should be right here. Right, we bounced right back into this gray box. That's resistance. We also swept the Monday high, putting in that deviation. We're now back inside the Monday range. So what you need to know about the dollar is it's looking weak. It's looking like it wants to lose this 101 support level. And if it does continue lower here after this deviation of the Monday high into resistance, watch for it to break the Monday low tomorrow during the FOMC statement, and then go ahead and retest the 101 level. There's a good chance now, if it does retest the 101 level, that it wants to break down further and go ahead to the next level, which is going to be at 99.3. So if this scenario does end up playing out, where we see the DXY go ahead, lose 101 and go to 99.3, all you have to know is that is very, very, very bullish for risk on assets like cryptocurrency. So things are looking pretty good from the DXY perspective. Of course, I just went over the bullish scenario. Now, the bearish scenario for crypto would be if the dollar goes ahead and it decides to just push higher above the Monday high and confirm a breakout, and then head back up here towards 103. All right, if that happens, it's not going to look good at all for risk on assets like crypto stocks, etc. But the way that this chart is looking with the weekly structure break over here in the trend line, the retest, the market structure break over here into the lower high, into resistance, sweep the Monday high, in my opinion, everything right now is lining up for a breakdown, and it also lines up with that May 5th date that I've been talking about for weeks here on the channel, saying that that is going to be the period in time where this choppiness will subside in the crypto market, and I expect things to pick up then at the end of this week. Okay, so now that we are covered with the DXY, it's time to move on to BTC. So the DXY is looking good for crypto. It's looking good for risk on. As you see, I still have my white dotted vertical line on Friday, May 5th. All right, that has been there for weeks now. Now, in regards to BTC here, this is the daily time frame, and really the main things that I am looking for with the FOMC statement tomorrow is I am looking to trade the extremes of this current range that Bitcoin is in. All right, in my opinion, the extreme of the range low is going to be down here towards 27K. And the extreme of the range high is going to be up here towards $29,500 to $30,000 up here. All right. So let me go over what I am seeing in the charts right now and what my general plan is. So I do have the Monday range marked on the chart as well. As you can see, the Monday high is up here at $29,340, and our Monday low is right on the support resistance flip level at $27,700. That's been on the chart for multiple months now, it seems, or multiple weeks, really going all the way back to late March. Regardless, this is a key level on the chart, $27,700. Bitcoin did put in a very solid bounce from that level last night, marking the Monday low. So with the FOMC meeting tomorrow, I'm essentially looking to trade a deviation. So it depends what comes first. It depends what the data is. The technical levels can tell us where price can go to, but the actual FOMC data is going to determine which direction price is going to go, if it's going to go up or down. Right? If the data comes out good, then expect price to push up. If data comes out bad, expect bearishness. It's that simple, right? Nobody knows what that data is going to be. All we can do is look at the technical levels ahead of time to set up a game plan for ourselves so that we know what we're going to do going into it, depending on what that data release is. So for Bitcoin, very simple. Right now, we are above the Monday mid-range. So if tomorrow at the time of the FOMC meeting, price starts to push up and it's hanging out here towards the monthly open and Monday high, and then at the FOMC time, if we go ahead and deviate, I'll be looking for a move back into the Monday range. And then essentially we have this structure level here, right? This was a previous support over here at $29,100 to $29,200. So if we deviate the Monday high, come back in, and then retest this previous support structure, flip it to resistance, this would be the trigger. This is where you want to short 29,100 to 29,200. You can short the deviation up here, but you are in danger of price just going ahead and running higher and squeezing you out of the short, which is why it is best to wait for a confirmed entry trigger. And in this case, it's just going to be a retest of this previous support structure, flipping it to resistance. And then you go ahead and trade the move down to that Monday low level at $27,700. All right, and then from there, you watch and see what happens. You take partial profit at the Monday low, but if it breaks down, shows weakness on a retest, you can go ahead and add to the short, because then from that point, I would expect us to go ahead and at least test this range low at $26,500. Below that, it's really just clear air, clear skies to the next main level at $25,250. All right, so that's the bearish scenario for Bitcoin, and this is all going to happen pretty quickly tomorrow with the FOMC data release. And again, we're just looking to trade the extremes of the range here. So on the other hand, if we go ahead and at the time of FOMC tomorrow, if we come down to the Monday low, same thing. I'll be looking to trade a deviation back into the Monday range. All right, you can go ahead and long it underneath the Monday low, but it is best to wait for a confirmed reclaim of this previous structure. This is your trigger. You long here, and then you trade it back up to the Monday high. Very simple. It's not rocket science here. You just have to wait and take the trade when the market does present the perfect opportunity to give it to you. So if you're wondering how exactly I'm going to go about trading it tomorrow at 2 p.m. when the FOMC data is released, I will be letting everybody know inside of the Crypto Empire Premium Discord group. If you want to go ahead and get inside of the group, you can check out my website on the link down in the description below. So that's Bitcoin. Let's go ahead and move on to Ethereum. And this is really just kind of short-term analysis here going into tomorrow. Now, let's take a look at ETH. And on ETH, as we see, yesterday we marked the Monday low right inside of our demand zone. Right, if you guys watch all my videos from last week, you should be very familiar with this demand zone from 1820 all the way down to 1760. 1760 still a very high area of interest for me, as we have these lows on the 4-hour, these equal lows. It's very possible, in my opinion. Right, we'll go over both scenarios on ETH. And essentially, we are trading in a bit of this range right now on Ethereum. The range high is up here at $1,963. Range low is trading at $1,782. And in my opinion, Ethereum is easier to read now than Bitcoin. Simply put, the price action is cleaner, and it's just easier for me to decipher and read this chart compared to BTC at the current moment in time. So ETH, again, this is a different chart than we were just looking at, right? We were just looking at this one here, but we switched it to the Bitget perp chart. Now on ETH, we had this support trend line going back to March 15th. It has been used a few times now, and yesterday it did go ahead and bounce to form the Monday low, and that is basically right at $1,800. So the plan is pretty identical to Bitcoin for Ethereum right now, but at the same time it's a little bit different because I'm going to be using this range that I have on my chart instead of the Monday range, because I think that these levels of liquidity have a higher chance of getting tagged tomorrow during FOMC. So for ETH, what I am looking for is very simple. Whatever the market wants to give first, I'm going to trade that. All right, so the bearish scenario would be if the market decides to push up to the range high extreme. All right, and if it goes ahead and it sweeps this level at 1963 and goes and punctures this supply zone. As you see, we have a drop, base, drop supply zone, and this starts at $1,978. So if tomorrow at the time of FOMC, ETH makes a quick, sharp move up right into this supply zone, simply put, I'll be waiting to short this level back down on a retest. That would be the trigger, and I would trade this all the way back here towards the range low at 1780. All right, it's really not that complicated here what I'm looking for. All right, the main thing is just to have the correct levels marked on your chart, which is why I'm making this video for you guys, right? So you can have the correct levels marked on your chart as well, so you're not going into FOMC blind tomorrow. Now, the bullish case for ETH would be that if the market gives us a sweep of the Monday low, and this is a demand zone down here, and we also have those equal lows at 1760. So really, you know, this level at 1780, yeah, it's interesting to me. This wick is definitely appealing. It's the start of the demand zone as well. But the main level I'm interested in playing is 1760. All right, I went over this in last week's one of last week's YouTube videos. At 1760, these equal lows. There's definitely a lot of stops built up here, a lot of liquidity to hunt. So the bull case for ETH is simple, right? We make a sharp move down into this demand zone. All right, maybe we sweep these lows. That would be ideal. And then on the reclaim, right, the reclaim structure would be the top of the orange box, right? The reclaim here, retest, bam, that's your trigger. All right, that's where you want to get long, and you just trade it back to the range high. I would take partial profit here, right? At least 50% of the trade. Let the rest run up here towards the range high and this supply zone. All right, all we're doing here is looking to trade the extremes, because again, I'm really not expecting any large major macro moves until Friday, May 5th at the end of this week. But for now, we're still range bound. We are still choppy, and this is how I'm looking to play FOMC, a pretty simple trading plan, and it does not have to be complicated at all. All right, we're just trading level to level here. So that's Bitcoin and ETH. Those are the main two. I'll go over a few alts, why not? So INJ, as we see here with INJ, it has been one of the stronger altcoins in the market over the past few months. And as you see, I do have a nice support trend line on my chart going back to March 28th, the origin of the trend line. We bounced on it once over here on April 24th, and currently we are getting very close to it, right, at $7.40 over here. We have not tested it again. So the plan here for INJ is, you know, relatively the same as Bitcoin and Ethereum, but as you can see here with INJ, it gave you that sweep of the Monday low, and that's the perfect deviation trade to take. All right, as you see, it quickly reclaimed on a pin bar candle. You see that pin bar candle close on the 4-hour. That's kind of an entry trigger right there that you can go ahead and take that deviation long trade, and now it has made a quick move back up to that Monday range high. So for INJ, what I'm looking for is essentially, depending again what the market does want to give first, I would rather just trade Ethereum personally. I'm probably just going to trade Ethereum, but I'll mark this out for you anyway. So for INJ, if we do get a nice sweep of the Monday low, maybe we deviate from the trend line at the time of FOMC, and this is a nice demand zone. Just looking at this chart here, we do have this structure. Let's make this green. So on INJ, if we do get a test of the trend line, maybe we do a false breakout underneath it, we deviate, we come into this demand, right? We have this wick structure, previous resistance, can flip that into support. I'll be looking for a reclaim of the trend line. All right, that will be the long. You take it back up to the Monday high, but ideally you can take it up to this liquidity at around $8.50. Now on the flip side, if the market gives a nice push up above the Monday high, at the time of FOMC tomorrow, we come into this supply zone, we sweep this wick over here at $8.66. All right, I'll simply be looking to short the breakdown. bang, get short there, trade it to the Monday low, and that's the trade. All right, this is going to take place quickly, so you definitely have to be ready ahead of time, but this is what I'm looking for. I'm liking the structure of INJ, being that it's close to this trend line right now. And why don't we go over one more while we're at it? Let's go over Blur, because Blur, kind of the same story, where we have this big trend line at play as well. So on Blur here, again, going back to March 12th, start of the trend line being used as support over and over and over again here. And well, look where we are on the chart now. We're sitting right on that support trend line. Now, as you can see, every time we would bounce from the trend line, it would be a violent bounce, and then we would consolidate, pump through that trend line resistance, come back to the trend line, and again, break that resistance to the upside. Now, as you can see, the slope of the trend line here, the resistance trend lines, 1, 2, 3, 4, the slope is getting steeper and steeper and steeper and steeper. All right, that's one thing to note there. So for Blur, the main thing I'm looking for is, being that we're so close to this support trend line, it does look ready to break. So with that being said, a break would also be a break of the Monday low. And we got all this down here at 57 cents. All right, so the breakdown target, first one would be 57 cents, and then the next one would be 54. And very simply put, I would look for a sweep of these wicks. And then if we reclaim the wicks, I would look for a long entry trigger right at 57 cents. And I would look to ride that back up to the Monday high at 71 cents. I think this is going to present a pretty good trade here on Blur. I'm watching it. It's on my watch list. And I just like it because it's at such a critical point on the chart on this support trend line. We can go to the daily time frame so that you can kind of see what's going on here. And Blur also did just make this lower high too. All right, showing that the buyers are stepping in less and less and less off of the trend line. So yeah, big, strong probability at this point that it does go ahead and break the line. But the market decides to go ahead and flip bullish. You know, a reclaim of this structure at 57 cents is going to provide a very good long trade back up to the highs over here at 71 to 74 cents. So that's what I'm looking at. Main things I'm going to want to trade tomorrow is Ethereum mainly, and then Bitcoin too, if any good ones present themselves there on the Bitcoin chart. But I hope that you did enjoy the video. If you are wondering where to trade, if you want to trade with me, go ahead and check out Bitget. You can sign up using my link down in the description below. You get a ton of sign-on bonuses as well as discounted trading fees for life. So in this video, we went over the trading plan for the FOMC meeting tomorrow on May 3rd, 2023. I hope that you did enjoy the video. If you did, make sure you let me know by smashing that like button down below. And if you are brand new to Crypto Empire and you're not already subscribed to the channel, go ahead right now and smash that subscribe button down below and turn on all bell notifications so that you don't miss any future videos. And my name is Connor from Crypto Empire, and I will see you in the next video.